Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group YouTube channel. My name is Michael Edward Parinati. I go by Michael Edward. I began my career over 17 years ago working at T3 Alpha Fund, my first job right out of college, where they taught me I had to go through first their educational training program before they let me touch even $1 of the fund's money. Then 2008 happened, and that was the Great Recession and the stock market crash, but also the same year that I received one of the firm's Trader of the Year awards. You fast forward today, I'm the co-founder and head trader of True Trading Group, along with my team of 9 professional trading moderators and over 30-person staff. We've helped thousands of members from all over the world to reach their goals. We actually have members in 115 different countries. And in case you guys didn't know, True Trading Group is the fastest growing and highest rated premium online education platform available to the retail trader today. Your membership includes Benzinga Pro's real-time news feed, congressional trading data, insider trading, a simulator, the trading views charting software, trade idea scanner, a trading journal, social sentiment scanners, analyst ratings, dark pool data, unusual options activity, options flow, and so much more. Yes, we give you all of our courses. Yes, we give you all of our trade alerts, where the moderators and I have actually been able to maintain a cumulative win rate on all of our executions of just around 80%, now going on roughly the last 4 years. But you also get access to all those tools. It's all part of the True Trading Group platform. Okay. But what we're here to talk about now today is earnings. All right. You had a couple of really good earnings reports come out, or a couple of important earnings reports come out today. You had Disney, you had ARM, which is recently a company that just went public not too long ago, actually a stock that I've traded many times since it's actually gone public with tremendous success. And after the earnings report that the company had today, another stock that we're going to be focusing on tomorrow inside of True Trading Group. But you also had earnings reports from Roblox, you had earnings reports from AMC. You know, some stocks that a lot of people really follow very closely that tend to have really good movements. I haven't traded AMC in God knows how long, but I know it's a stock that a lot of people still are interested in. So I'll go over with you guys what those earnings actually were. The ones that I'm focused more on are certainly Roblox, a phenomenal mover, ARM, and then also Disney, a stock that's gotten beaten down to death. Is it time for that stock to maybe start to finally give you any type of relief bounce? While the overall market just had its 8th consecutive green day in a row. It's the longest winning streak for the SPY since 2021. It is actually the 9th green day in a row for the NASDAQ. Again, guys, the best winning streak, the longest winning streak that we have seen in well over a year, basically almost 2 years now. Since the last, it has been 2 years, and the last time that you've seen a win streak like we've seen here this week. But I'm sad to say that I think that win streak is coming to an end. It may come to an end as early as tomorrow. I've been expecting a technical market pullback this week. It has not happened yet. The market has just inched itself higher. I mean, we're really not even moving higher. You're just climbing by a couple of pennies each day. It almost feels like, while the markets sit at this big resistance level. I think a pullback is due. I'm looking for a pullback actually, between tomorrow and Friday. I know I've said this in the beginning of the week. Still hasn't happened yet, but I still do think this week that we're going to see a pullback to get, down into like the mid to low 430s. I think you're going to get underneath 435. I think we'll trade back more towards like 434, 433 on the SPY, give you a nice little, $2 pullback, $3 pullback, and just consolidate what was and has been an unbelievably massive move that this market has had over the last 2 weeks. I'm going to talk to you guys about a little bit of a warning sign that I see in 2 different parts of the market. And I'm going to tell you one specific signal that I'm looking for that's going to actually lead me to believe what the market is anticipating going into next month and going into next year. And I'll talk to you guys about that in just a moment. Before we get into that, I want to go over earnings. I also want to remind you guys, for anyone that's on this live stream right now, if you guys have ever had any interest at all in True Trading Group or joining myself and the 9 professional traders that are with you during the day, we day trade, we swing trade. We also do stocks, options, crypto, and futures. We literally trade everything in True Trading Group. That's why there's 9 professional traders. We all have different styles and we trade different things. So you guys get access to all of those different type of trading styles and strategies. We have a 7-day trial. I'm going to tell you about it now before I get into all this information in case you guys want to join us for the next week. I think you should. Why? Because it's November 8th and we have already had 8 triple-digit gains alerted, called out, and capitalized on in True Trading Group in the month of November. We had 20 in the month of October, which was actually the best month that we had in the entire year. It was 20 triple-digit gains in October. We are setting out to break that record so far in November. We are on pace for it. We've already had 8 triple-digit gains. That's the type of opportunities that this market provides with the movement and the volatility that we have seen. So if you want to come trade with myself and the other professional traders for a full 7 days, it's not 7 calendar days, it's 7 trading days. The weekend and holidays do not count against your 7 days. Go to ttgthree.com right now. That is ttg3 spelled out.com. Enter your name, email, phone number, click yes, I want this, fill out the form, and then get your butts in chat. When you join the trial, make sure you download our mobile app. The mobile app is for iPhone and Android. This is important if you are busy and have a full-time job. If you are like 82% of our members that have full-time jobs, then you are busy during the day. You can't sit in front of a computer screen all day long. I get it. Let us do the heavy lifting for you. Download that mobile app. You'll be able to see the screen share during the day, listen to the audio analysis as the moderators and I talk to you about what we're doing and what we're seeing. And most importantly, get real-time push notifications sent directly to your phone when our moderators enter and exit their positions. That is how so many of our members are able to follow along with what's going on in True Trading Group every single day. The cost of our trial membership is $3. Why do I charge $3? We charge $3 to make sure that you are just, in fact, a real person. There are thousands of members on our platform and trading every single day. We maintain a very high quality chat room. I do not want people coming in there and just spamming nonsense in chat, disrupting everybody while we all share the same goal, and that is to make money. If you are coming into our chat room, it is because you want to make money. Let's keep the focus there. There's no room for discussions on politics or religion or anything like that. We are focusing on making money. That's it. All right. We will not tolerate any other nonsense. That's why we charge $3, just to make sure you're a real person. But the $3 is a one-time payment. There's no automatic renewal. There's no reoccurring payment. There's no, oh, the 7 days are up and you automatically get charged to become an annual member. No, after your 7-day trial is over, it just expires. You're never charged anything again, and you no longer have access to the platform. You need to manually become an annual member in order for you to be charged again. It's a one-time payment of $3. It'll be the best damn $3 you ever spent in your life, especially considering the hot streak that the moderators and I are currently on. Go to ttgthree.com. That's ttg3 spelled out.com and get your butts inside chat. Let's go over and talk about what's going on with the earnings. Disney is the one that I would like to talk about first because Disney is breaking above a major level of resistance that if this can actually hold, okay, if it could hold, I think you could be looking at the possibility of some upward movement finally for Disney, a stock that's been beaten down to death. And I want to show you this level that I see on my screen. You guys can see all of this area, right? That used to be a beautiful level of support. That level broke in August. And after that level broke in August, you can see it became resistance in September and became resistance again there in October, and then resistance again there in November. And then now today, with earnings, we're gapping above it. We have to watch to see, okay? We have to watch to see what this stock is going to do when we get back to this level. Is this level that was resistance now going to start acting as an area of support? You also have this purple line. This purple line is the 100-day moving average. You can see very clearly it was resistance right here. Then it was resistance again right here and resistance again right here. Well, now the purple line is right underneath us, but it's also still at this level. So what you are going to want to see on Disney is, does this level now start to act as an area of support to eventually give you now actually a higher low and get the stock to trade to the upside? The target for Disney to the upside is going to be up there in the low 90s, $91, $92, and that puts you right at what will be that yellow line, the 200-day moving average, and then this previous pivot high, which you can see is a little bit of structure back there from the summertime. And that would be kind of the target area that I would look for there on Disney, is pullbacks into 86 long, stop loss under 85, look for move up towards 91. And that's going to be one of the things that we're going to set our sights on. Revenue did miss on Disney, but they beat on earnings. So earnings per share was a beat. Revenue was a miss. Disney Plus added 7 million core subscribers. So not a certainly not as bad of a report as a lot of people were kind of expecting. Their revenue was 21.24 billion, which is up 5% year over year, but that missed the street expectations of 21.33 billion. Earnings per share were 82 cents versus 70 cents, which was expected. Revenue broken down by the categories. Entertainment was up 2%. Sports were flat. Experiences up 13%. Let me see. Okay, total increase. Yeah, total increase 86% year over year. Each of the three reporting segments saw an increase in operating income with a total increase of 86% year over year. That's actually really good. So our results this quarter reflect the significant progress we've made over the past year, says Bob Iger. While we still have work to do, these efforts have allowed us to move beyond this period of fixing and begin building our businesses again. And that comment right there from Bob Iger is really what has the investment community a little excited, which is why the stock is trading up a couple percent, is because when Bob Iger came back to Disney after he had already stepped away, everything fell apart. The board begged him to come back and take over CEO role, which he did. And he has had to turn this ship around. And now Bob Iger is kind of saying, hey, we're done fixing. Now we can get back to growing our businesses again. And that is making investors feel like maybe the worst is behind us and maybe now the stock is finally bottomed. That coincides with the technical analysis that I just gave you. All right. So that is going to be Disney. Now we've got ARM. ARM is new IPO. I've traded this thing a lot. I made a lot of money shorting ARM. We caught the short here. We caught the short here. I mean, we made some really good money trading ARM after its IPO. And this looks like another short setup to me. This is the initial IPO low. So there's the low of the day from the IPO. You can see it was support there again when you test it a couple days later. And then you'll see here resistance, resistance, resistance. And now here you go, resistance. And then there's a gap down on their earnings. So let's talk about what were their earnings. Let me go through. Oh, why can't I get to pull this up? Why is this not loaded? My ARM earnings are not loading for me. Hold on one second, guys. I'll get this pulled up for you so I can give you the exact numbers for ARM. Okay. All right. So here's their earnings, their earnings actually aren't terrible, but the stock is reacting poorly to it. So I have to look a little bit deeper into the actual things that were said because their total revenue. Oh, here you go. This is why. Now I got it. So it just loaded up for me. So now I've got it. Okay. Earnings per share, 36 cents versus 26 cents. That's a beat. Revenue, 806 million versus 747 million. That's a beat. Chips reported shipped, 7.1 billion. However, that's down 6% year over year. And here's the reason why the stock is down. They see the next quarter total revenue of only 720 million. Okay, 720 million to 800 million. They gave you a range from 720 to 800, but that range is below the previous quarter of 806. So they're talking about declining revenue for the next quarter. Analyst expectations were 773 million for next quarter. They're saying 720 to 800, which is on the low spectrum of the 773 street expectations. And analysts expecting 27 cents a share for earnings. They're reporting 21 cents to 28 cents. Again, a range that is at the much lower end of what the analysts were expecting. So down 6% on total chips shipped and coming in light on expected revenue and expected earnings per share for the following quarter. That's why the stock is trading to the downside. I personally believe that ARM is overvalued. I think this stock should be trading lower. It's been there's been a lot of support for this thing though once you get underneath 50. I remember very keenly because it was this day that I covered the last of my short position. We caught this entire move to the downside, and then I was a little surprised. Oh, there was news. They had news actually that day. I forgot what the news was. Something about them, and I actually forgot what the news was. Was it NVIDIA? No, it wasn't NVIDIA. I forgot what the company was. There was news on this day though, the 23rd. I forgot what it was. And then when the news came out, I actually took my final profit off the table. But it's been stubborn down here. You see, we've double bottomed down there at 47. So if that 46 to 47, that's your support level. Let me delete all this so you can clean this up for you guys a little bit. But this is your support level from 46 to 47. It's about $1 wide support level. If that level breaks, then what you want to do is you want to look for it to start to become resistant. So I'm telling you now, if this stock sells off to the point where it might not happen tomorrow, but in the next couple of days, keep this on your list, draw this line on your screen. If you break underneath that level, then you have to watch for bounce backs into that level, okay? And then get short against it and look for follow through to the downside. So that is a trade idea that I'm going to have on ARM. It's going to be on my watch list now for the next probably 1 to 2 weeks to see if that actually it's on my watch list there to see if that actually happens. And if that actually breaks that level, then I'm going to be looking for the downward move. All right. So that's going to be ARM. Then we've got AMC. Now, AMC, listen, guys, I don't really, AMC, I don't follow this stock. I haven't traded this stock since 2022. I haven't touched this thing since 2022. I have no interest in this stock whatsoever, but I know a lot of people that, are on YouTube do. So let's talk about it. AMC, negative 9 cents on earnings per share, better than street expectations of negative 38 cents. And 1.41 billion in sales. That's above the 1.17 billion estimate. Q4 is going to include Taylor Swift, Beyonce film results, Hollywood strikes impact to be felt in 2024. So better earnings, but AMC telling you that the Hollywood writer strike, they're going to feel that in 2024's numbers. So that's why the stock is trading to the downside even though they beat on sales and they beat on earnings per share, even though those numbers were good, stock trading lower on the worry of going into next year. And then lastly, but certainly not least, guys, we've got Roblox. All right, lastly, but certainly not least, we have Roblox. And what I would like to go over with, I love, Roblox is a fun stock to trade. Huge gap up. Daily active users, 70 million. That is up 20% year over year. That is phenomenal growth on daily active users. Daily active users over the age of 13 are up 25% year over year, up to 40 million. Hours engaged. This is another huge one. 16 billion hours engaged. That's over a 20% increase year over year. Monthly unique payers up 14% year over year. Bookings up 20% year over year. Free cash flow of 60 million. Looking pretty good, right? Looking pretty good. Not too shabby. Good numbers coming out there for Roblox. Caused a huge gap up in the stock, and the stock then just had a little bit of a pullback. Still finished the day up 11%. What I'm looking for, all right, with regards to Roblox, is for this level to be support, right? This level right around like $38 to $37. I'll just draw 2 lines for you. That's it. That's the zone that I'm looking for to be support on the pullback. You can see support, right? And then you have this yellow line. That's the 200-day moving average. So I see a nice little support level down there, 37, 38. Maybe there's tradable bounces off of that area on the back of the good earnings report. All right. So that wraps things up there, guys, for the earnings update from today. And then you've got the SPY. I'll just go over with you guys here one more time. What I'm looking for from the SPY is resistance resistance, open gap, and then you've got, prior support. I'm just looking for a pullback off of this level. All right. I'm looking for a candle on the SPY that looks something like this. I'll even make the color for you, so there's no mistaking. That's what I think you're going to see. Okay, that's what I think you're going to see. If I'm wrong about that, I'll probably lose money tomorrow. I am going to be looking for short setups tomorrow off of this resistance level with stop losses at this purple line. I don't even know if you need to give it to the purple line. I actually kind of feel like we might even be able to use today's highs, as I feel like today we could kind of start to be topping out. You can see really low volume here, really low volume these last 3 days as we've consolidated at this resistance level. I'm just looking for a pullback day. We'll see if we get it. I'll be on top of some short setups if we get that. Now, here's the warning sign that I'm telling you about now. There's two things that have really caught my attention over the last couple of days. One, the price of oil. Two, the price action of the Russell 2000. Oil has been getting smashed. All right. Oil's been getting smashed back down into the mid 70s on WTI crude, $74, $75 a barrel, when just seems like just 2 weeks ago, it seems like we were a stone throw away from 100. The reason why oil is moving to the downside aggressively is because of very disappointing economic data from China and Germany. It certainly looks like Europe is going to go into a recession. Okay. With what you're seeing from Germany, which is the largest economy that you have in Europe. China's economic data has also been very poor. So that has caused concerns in the oil market for low demand for oil. If there's recessions in Europe and China, which is one of the largest economies in the world, obviously, if that demand is slow and Europe demand is slow, and then all you've got really is the United States, right? And different other areas, obviously South America, everything else, but where the largest economies in the world are, which you're talking about the United States, you're talking about China, you're talking about Germany. These are the largest economies that are out there. So if you're going to get low demand from Germany, and also the rest of Europe, and then also China, that is what's causing oil prices to move to the downside. That could be a little bit of a foreshadowing of recession fears. Also, I'm looking at the IWM. The IWM is the Russell 2000. What I want to point out to you is how much of, last week's rally. So you had this rally last week. Look at how much we've already taken back on the IWM. The IWM is the Russell. These are smaller companies. These companies are the ones that will tend to get hurt the most during times of economic stress. These are companies that are typically ridden with debt. They have to continuously raise capital. They're not big enough. They're not Apple. They're not Microsoft. They're not Meta, right? These are smaller companies that need to raise capital and to take on debt in order to grow. And with interest rates where they are, debt obligations are much higher. Their interest expense is significantly higher. You're talking about, imagine if a company, I'm just making up, numbers for easy math. If 2 years ago when interest rates were 1%, your interest expense on the money that you borrowed on your debt was $1 million a month. Well, now it is a hell of a lot more than $1 million a month. Maybe now you've gone through different things and you're raising more capital at a much higher interest rate. Your debt service is no longer $1 million. Maybe it's 1.5, maybe it's 1.6, maybe it's 1.7, right? So now you're sitting there and say, oh, well, crap, that's eating into a lot of your cash flow. If you were just a regular small business. Obviously, these companies are much bigger than that, but I'm just giving you the sense for just easy math. So you just understand kind of where I'm coming from. The fact that this is given back, look at this pullback over the last couple of days. Now, you compare that to the SPY's actually moved higher. You compare that to the NASDAQ actually moved higher. But the IWM has moved down over the last 3 days. If the IWM is to give back that entire move, if the IWM goes down to here, that is going to be a warning sign to me. The fact that you would have the IWM selling off, you have oil selling off, that is showing me and telling me that there is a little bit of a recession fear and recession anxiety that's out there in the market. That's where I see it. Those are two signs that I am paying very close attention to, and also feeds into why I think I'm going to make money to the short side tomorrow. that does it for me here today, guys. I hope you guys enjoyed the video. My TG members, I'll see you guys all in chat as always as we go through the pre-market game plan, talk about the stocks I'm aiming, the entry points I'm looking for, the prices I'm getting in, the prices I'm getting out, and how we're going to make some money. If you have not yet done so, make sure you join our trial membership. Again, the trial is 7 days. Go to ttgthree.com. That's ttg3 spelled out.com. Enter your name, email, phone number. Click yes, I want this. Fill out the form. Get your butts in chat. Again, it is a one-time payment. There's no automatic renewal. There's no reoccurring payment. There's no automatic upcharge or anything like that. All right, no funny business. One-time payment, $3. Be the best damn $3 you ever spent. 8 triple-digit games already in the month of November. Get your butts in chat. Start capitalizing on them. Thanks for joining me tonight, guys. Subscribe to the channel. Smash that like button. I'll see you guys all in chat. Take care.